Bearer Glass full year 2025 audited results. Revenue grew by 27%. Profit before tax grew over 154%. Gross margin jumped from 26.2% to 35%. What happened? Energy cost grew just 3% against 26.8 revenue. That's the energy cost was growing at 3.8%, but revenue was growing at 26.8. So what happened there? This is furnace efficiency and the renegotiated gas term doing the work or doing the heavy lifting. This is typical a genuine operating leverage, not noise. So let's dive in. You know, the better glass, so they use furnace to heat up their glasses and all those stuff like that. Then they use the gas side of things to run the day-to-day operation. So let's look at the income statement and see what's really happened. After that, we look at the balance sheet. Then remember that you should follow us on X, subscribe to the YouTube channel. So this is the revenue side of things. So you see that this is 24 against 25. In 24, revenue was just 117.6 billion, but in 25 it grew over 26.8% to 149.1 billion. Then if you look at the gross profit jumped from 30.8 billion to this. So the top line is looking up. And interestingly, the margin, the cost of sales, if you overlay it margin wise, it's more efficient in 25 than in 24. Then if you come down here, you have to note one good thing that happened is that their credit loss, that the provisions they make for credit now flipped from a negative standoff point. There was a reversal to positive close to $1 billion, that's 900 million. Then another thing to note very well is that the loss shrink more, less than just 100 million from 1.7 billion. Then the finance cost also, and they earned more income. So these are the positives that added to the middle line. Then profit before tax now ballooned from 19.9 billion to now 50.5 billion. So you're seeing the heavy lifting coming in from these stuffs you are seeing. Other income too grew too. Then profit, now the bottom line side of things, deducting tax, you see that the bottom line now, they now shows the margins are looking up. So it's a sweet spot. Let's look at the balance sheet. Hold on a sec. Okay, so this is the balance sheet. So look at the balance sheet. You see that the total asset grew more. From the asset side of the business was over 134.4 billion before now, but now grew to 183.9 billion. Then if you look at the equities too, equity grew very well from 64.8 billion to now 96.3 billion. So looking pretty nice. Then the liability side of things, naturally liability should grow, but the concerning thing is this short-term borrowing, the short-term borrowing side of things. If you look at it from, there was not a long-term borrowing, but this short-term that came in here, this 26, if you compare it, that is just one little concern we're having over there, but we're still going to talk around it. If you look at the ratios, you see that they are looking up very well. Current ratio hitting the benchmark. So it is then the leverage side of the ratio and the returns and everything. So pretty nice. But look at the things, the key takeaway things you have to be in mind. Number one, you have to know that Better Glass has a free cash flow. Somehow, if you strip it out and adjust it, they are netting a free cash flow over 15 billion annually. Then their sales, that's that revenue side of things you were seeing at a time. So let's go to our X page. So remember to follow us on X, very important, so that you can download these graphics for yourself and subscribe. So their sales, they export and also they export, but the local sales, the sales they make locally grew very well. The sales they make locally grew very well, but their exports dropped. Then Their biggest customer is Nigerian bottling company, which is the people that bottle Coca-Cola and stuff like that. They contribute close to 21.1% of that revenue you see in a time. Sorry about that. So the sales, so the borrowing they made, like we are showing, they made some borrowing, but due to the long term of the borrowing and the funnel they are building for glass business, of course, you're supposed to know that. So they now capitalize that borrowing. So that borrowing was now seen as a capital. So it was stripped out. So that is one thing to note. Like we said, the biggest customer is Nigerian bottling company. Then another thing to note is that government do encourage export, because if you export, that's Nigerian government, you can earn FX. So there is a program where you earn some money by exporting, but they have stripped out that old program, which was under which was running with the it's a Nigerian Export Promotion Council was running that program, and this thing they were giving out at a time was NDCC. So it was now ruled out. So the new export expansion grant now comes in as a promissory note, and in the books of Better Glass, they have a potential 3.37 billion they will claim, even though the government have rolled out. So they just recorded it as a claim in their book. Then the Helios guys has fully completed their buy of Better Glass from Frigo Glass. Yes, you have to know they bought from Frigo Glass. So the total the complete buyout was over 100 million euros. Then it's also worthy to note that the FX now, like we see, FX position has now flipped. Total FX position exposure has now flipped from negative to positive. So that is it about Better Glass. See you on the next one. Subscribe, comment, share, like, ask your questions. Go to our X page here, like we said, and read up more. Yeah, even though network didn't allow you, read up more, download the graphics, you read up more. Okay, see you on the next one.